Welcome to Tradiers, the Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. Thank you for the support on this show. This is one of my favorites because of all the DMs and all the messages you guys give. You guys are the best. I say it a million times is that it's not, you're not fans of the show. We're fans of you guys. We have some really, really intelligent people, and I appreciate it. Also, Bobby and I are 2/3 of the team at unfilteredinvestor.com. Please check us out there. And we are 2/3 of the team that's going to be presenting live in Palm Beach Gardens a week from Friday, right? A week from Friday. Are we on Friday morning? Yeah, with your microphone's not on, Bobby, which, by the way, is a dream come true to me. I'll just keep talking. Well, now it is. Now I can hear you. I couldn't hear you. No, it wasn't. I couldn't hear you before. But please join us in Palm Beach.
Your dreams get crushed.
Now my dreams are crushed. Okay, tell me about what you read from the Fed statement today.
Basically not much, but the biggest thing I think was that we got 4 dissenters, and that's the most since 1992, October of 1992. We had 4 dissenters in the FOMC meeting. That's obviously a long time. But the interesting part is only 1 dissenter on the decision to hold rates. And that was, you can guess who it was, right?
Marin.
It was Marin. He wanted a 1/4 basis point cut. The other 3 dissenters were on the language of the statement, because in the language, and I have a screenshot, we can even go over it if you guys want, but the language was not changed at the bottom where it said the Fed is still watching both sides of the risk of their mandates. So higher inflation, lower inflation, higher unemployment, lower unemployment. The other 3 dissenters wanted to take away the dovish language out of the statement, and Powell didn't want to do it. So they're technically dissenters on the statement, not on the decision. In other words, those 3 are looking for higher rates before lower rates.
That's interesting. That's interesting. Very interesting, because that's a different kind of dissent. Yep. And I'm not sure what to make of it. Perhaps our guests can help us make some of it. You guys know how I always introduce many of our guests, and this is going to be no exception. You guys have maybe watched Bobby and I in media for the last 25 years. Sometimes you think we're full of shit, but one thing you cannot deny is that for some odd reason, we get fantastic guests, and today is no exception. Let's bring on President, CEO of Mike Lee Strategy. You probably can guess his name. Mike Lee. How many times when you get an intro like that, do half the people think they're going to see the Asian guy from CNBC with the glasses, the other Mike Lee, who's also a friend of mine, who I actually like quite a bit, and he was ballsy enough to stay bullish when everyone was telling him he shouldn't be. Do you think people confuse you with him quite a bit, Mike, or no?
You know, I'll tell you, a lot of people think I'm Asian until they meet me, and I'm like, we were just talking. I'm 6 feet tall. I weigh about 250, and I like, my joke is like, I'm just a small Asian man trying to make my way in the world, right? But like, I'll tell you, like, getting confused with Tom Lee. I'll take that.
Oh, Tom Lee. By the way, I was calling my friend Tom Lee Mike Lee. I'm so sorry about that, Tom.
You guys ever seen that Seinfeld episode with Donna Chang?
No.
I'm just recommending to anyone who hasn't seen it, watch the Seinfeld episode with Donna Chang, because that's basically the same thing. She's actually Jewish, and her name is Donna Chang-Steen, but their family shortened it to Chang. So Jerry thought he was going to get a date with an Asian girl. Anyway, go ahead.
But anyway, I don't even know what's politically correct or incorrect anymore. So I assume if it's politically incorrect, we're probably walking on that line that we always do. Mike, you heard what Bobby was saying about the Fed today. So I think it's interesting that, of course, Marin wants lower rates. Today in the rundown, the Trader rundown, we did the notion that Kevin Warsh is going to come in. I fully believe that he wants lower rates. I don't know that he has a clear path to get there if oil's above $100. How do you make sense of all this?
Yeah. So like first, if Powell wanted to seem non-political, it'd be very easy for him to seem that way. He just wouldn't talk about this stuff, right? He wouldn't threaten to stay on. He'd comply with Department of Justice subpoenas. I don't know that he's ruined the Fed, but like his little, pissing contest with Trump it's like, I don't know that you could take this institution credibly serious.
Wait, so you're thinking the 4 dissents potentially has something to do with people trying to distance themselves, to find things that they disagree with Powell to distance himself? Is that what's implicit there?
You know, I don't like. So like, I don't like all these statements and like what goes on in the background. And like, remember, it wasn't that long ago before Fed board governors resigned for front running, you know, having their wives' personal trading accounts front run trades. Like this whole thing is a mess. Interest rate policy has been a mess going back to, you know, Bernanke coming in with quantitative easing. And like, it's, so when you delve into the minutes and you look at what these people are saying, like to me, it's an academic waste of time, right? I think like if you want to figure out where interest rate policy going, you listen to Warsh, and I think Warsh, you know, even though he was on the board when they did QE and when they did the bank bailouts, he's realized like this has gone too far, and like what you need less balance sheet, less talking, less jawboning, less people in the media. Lower short-term rates, and then let the back end of the curve and let markets do what they want to do, because everything is manipulated by this, you know, $7-8 trillion balance sheet for the benefit of God only knows. And then you try to talk about it, and there's all this governor saying that. Like, the fact of the matter is, like, the traditional measures of inflation are outdated. The Bureau of Labor Statistics is a joke. Like you have no idea what the labor force is, right? And so, you know, I follow Truflation. You know, I think he hinted to that in his Senate Banking Committee hearing, that he looks at alternative measures of inflation. And if you look at that and you start looking at real-time hard data instead of monthly survey data, you get a very different picture of where inflation is right now. And do you need to be, if we're somewhere near 2% and the front end's, you know, 3.5 to 3.75, do you need to be 150 to 175 basis points restricted? I don't think so. Maybe 100 or 125, which means you're due for substantial short-term cuts. So like when he gets in there, we'll see what happens. But Powell's staying on just to be a jerk. Like this is, you know, you could talk about Trump ruining institutions, but like this guy is like, you know, because he speaks in Washington speak and he lives in the belt sphere and Trump doesn't like him. They hail him like a hero, but it's like, you know, that Twitter account, like you had one job, like your one job is to battle inflation. We had the worst inflation in 40 years. And people talk about you like you're some sort of hero. Like, go get out of here, man. Like, I'm surprised, like, the left doesn't hate him more than kind of the Trump world.
Left can't hate anyone that Trump hates. If Trump hates somebody, then the left loves that person. We've seen that with John McCain. We've seen it with everybody.
Yeah. But it's like gross incompetence. Like you're getting 9% inflation hits in 2021. You're still expanding the balance sheet while you're at zero interest rate policy. Like, come on, guy. Come on. You know, Volcker would have raised like 500 basis points intra-meeting. Like, it's really it's sad how manipulated it's become. But like, look, this leaves us hope. And like, what I really want to see from the Fed is, I'm forgetting her. She was on Maria. One of the female board members, I'm sorry, I'm blanking on the name, was talking about like the disaster we have in private credit. Like, I don't know that it's a disaster, but the reason that area is so big and so big is because banks can't play in that market. And when banks can't play in the market, you don't really have a handle on what's going on. And the cost of capital is much higher. And so if the traditional banks could be lending at a higher degree to private equity, to business development company, portfolio companies, those sorts of things, you probably reduce the cost of capital, you probably reduce default risk, and you boost bottom lines for banks. And so what I'd like to see is short-term rates come down, the 10 and the 30-year stay somewhat steady, and a steep yield curve, massive bank earnings, the banks allowed to use more balance sheet because, like, yes, leverage was a problem in 2008, but only because the government created these subprime mortgages. You know, Fannie, you know, Westbury talks about it a lot. I'm sure you guys know Brian Westbury. Dude, Fannie and Freddie owned 70% of all subprime mortgages going into the crisis, right? And so this was a government-created crisis that they needed to blame on someone else. And like, look, you know, I worked at Morgan Stanley during that process. Like, they are not saints. Like, they are not without blame for certain facets of it. But like, if the government didn't create these products, like the banks wouldn't have done this. You know what I mean? So,
hey, boys, let me interrupt you real quick. Google just jumped 4%. At the same time, Microsoft fell 1.5%. So I'm assuming that earnings are probably out. There
They're
it is.
out. Meta's down 6% right now.
Well, that's the only
Google is up. Amazon is up. Amazon's up about, I think, 2.5%.
yeah. So I got some stats on that right there. And what you're looking at.
What do you got, Mike?
So Meta's sliding because their CapEx is bigger. They're not going to hit this CapEx numbers. So I don't know why the market, and we can talk a bunch about that. But like Microsoft Azure, so you're up 39%. The estimate was 38.2. That's the number you're really looking at. And like, that's a stock. Like, so Amazon, AWS net sales up 28. The estimate was for 25.7. Google, we came in at revenue 94.67 billion versus 91.5 estimates. Operating income 39.7 billion versus 36.19 estimates. CapEx in the first quarter came in at 35.67, under the estimates of 36.39. So I like, I like, this is these are all good earnings. Like I Meta, look, these numbers will come out later, but last quarter Meta's online advertising was up 18% quarter over quarter. I'm sorry, year over year. And they believe 10 of that 18% was from AI. And so like, I was talking to somebody about this yesterday. Like, my Facebook feed is awesome. And like, I shut down my Facebook in like 2017 because like too many idiots I grew up with are all of a sudden political experts. And I just shut it all down and turn it back on for my business like 4 or 5 years later. And like, I randomly look at it to see like my old memories, and now I have it curated. So I only see like my friends that post things that are funny or pictures of kids. But then it populates with all these random sports scores and UFC highlights and like all things I care about, so and so like I spend more time on there than any other social media platform.
Wow. That blows me away. That's interesting to me because I don't spend any time on Facebook. Bobby, do you use it as a valuable tool?
Not on it. I'm not on it.
I got off that thing just on what you said.
Same time as Mike did. I got off it. I think it was 2016, maybe 2015, maybe. Because all it was trouble for me in one way or another.
Right.
And I never got back on. I never got back on Instagram, although I think I still have an active account. I never check it. The only thing I ever look at is Twitter, and it's usually because I'm searching news or seeing how wrong Jimmy was this morning.
Right, exactly. Or how much I'm trying to piss people off.
Yeah. So I just don't use them.
They're the first company using AI. Like really using it, that's translating to their bottom line immediately. And their earnings, I haven't come to their earnings. They were supposed to do $6.50 roughly a share, and they came in at like $10.50. So their net earnings, and there may be some one-time numbers in there. There may be some one-time numbers in there, but you own Meta, Mike? Yeah, I own all these stocks to a degree for my clients. Like they're all going to win. And like these CapEx numbers, the street is freaking out about. So like half the data centers that have been announced just aren't going to be built. Like they just, even if you can get the approval of the local community, there's not enough energy. So let me just give you some data center math. All right. So you buy an apartment building, and it's the way you got to think about these data centers. You buy an apartment building, and it's $10 million. If you can get $1 million rent roll, that's a 10% cap rate. So if you build a data center for $1 billion and you're renting it out for AI compute, it's going to bring in anywhere between $300 million and $600 million a year in annual rent, right? So between a 30 and 60% cap rate, right? So it's the math on these data centers is mind blowing. And yes, after a certain period of time, you need to refresh some GPUs, or do you? Like that's highly debatable because like a CoreWeave, who even though Jim Chanos, who no longer runs money, says that these things are useless 3 years later, last quarter, the A100s, their NVIDIA A100s, which are legacy 2020 chips, like their rental rates went up. So like this compute equipment lasts longer. I have a client that set up a tech stack for the Sphere in Vegas and the GPUs they put in there in 2019, they're still using now. So if you build a process that exists on a certain tech stack, the new capacity is being used for new processes. It's not like when you get a new laptop every 18 to 36 months and you move everything over and you throw the old one out because it's useless. The useful life on these is a lot. I think it's going to be proved to be a lot longer. This compute is very, very finite. And yes, I can tell you I'm spending $1 trillion on data centers. It's like, good luck spending it. It's just, so I think the street freaking out on this. I mean, maybe Meta, they're good reason to freak out about Meta, but I mean, because the metaverse actually worked out really well, right? Or do I have that wrong?
You have that wrong.
I was only half listening because I was punching something up. I was like, did it? I don't remember that.
Let me ask you something, Mike. So you're I don't want to say all in, but you're a fan of tech in general. You're a fan of this AI and chip area. And then I do have a request in the comments for you to talk about a stock. But let me ask this question first. We talked to Jim Bianco on Monday, and one of the things he said was a lot of the inputs to these chip makers and the like, the people in their sphere, the input prices are going up. But what's happening right now is that their stocks are going to go up because their revenue is going to go up. And I asked him if it was the same thing as when oil stocks go up, when crude oil's price go up. And he said, yes. Basically, they're going to be making a lot more gross revenue because the prices of their inputs are going to go up. So their products are going to go up. Is that a thesis that you agree with? Either way, you're long. So if he's right, it helps you.
It's kind of like this, and I don't know if this relationship still exists. But a few quarters ago, Jensen Huang said for every latest NVIDIA GPU they could sell, they had an order for 15. And you just there's just not enough. And there's not enough of any of these things. So yeah, of course the inputs are going to go up in a feeding frenzy like this. And you need to understand how all that plays together. And so the first part of this is a token, and not token for cryptocurrency, but a token for AI. Is 3/4 of a page of a large language model. So these large language models, so if you search ChatGPT and you get a nonsense answer, it's because they search Reddit or Wikipedia or whoever, but it's that raw data that's out there feeds these answers. Okay. And so data is growing on an exponential basis. So every 48 hours, we create and collect as much data as we did from the beginning of the history of time until the end of the year 2003. Okay, so, and in a couple of years, that'll be every 24 hours and every 12 hours. So the data feeding these large language models, it's growing on an exponential level. Okay, these large language models are getting more complicated on an exponential level. So the amount of tokens they're using is just it's skyrocketing. So the cost per token, or cost per million tokens, has gone down by a factor of 90% over the last 3 years, while the usage of tokens has gone up 1,000x in the same time frame. And so that relationship's still going to exist. And then once you get to the age of agentic AI, that's where AI actually starts doing stuff. You're on another exponential level. So everything is this ginormous hockey stick. And it's not like drinking from a fire hose in terms of the demand for all of this. It's like drinking from Niagara Falls. So yeah, sure, maybe the margins get hurt a little bit here, a little bit there. But you have a company like Marvell, whose stock I've been talking about for a while. Their management guided before a bunch of new, last year, before a bunch of new deals came online this year, that the revenue was going to go from 8 billion to 22 billion in 2.5 years. It's things that until the age of AI, nothing you could ever imagine in terms of revenue growth for standalone established companies. So all this, the world is kind of waking up to this infrastructure. And I don't think enough people really understand this token demand growth and the limitations on energy, on land, on just everything that goes into building a data center and the nuts and bolts of generating this token demand. So a lot of these companies just have so far to go. And I guess you could say on the other side, so there's the neo cloud providers, which I basically own all of them. And so NeoCloud, I don't know where that name came from. It's kind of stupid, but it's basically the standalone cloud provider. So you have CoreWeave, you have Nebius, you have IREN, you have Cypher. I think CleanSpark is one of them too, and I may be missing one of the other ones.
IREN is one of those miners that shifted, right? One of those Bitcoin miners that shifted.
They all are. They all are. All this compute demand. And so like they all have little different stories to them. So Nebius, which is NBIS, that stock has just skyrocketed. They're in Europe and they're conservatively managed. IREN is all renewable energy that powers theirs. And then CoreWeave's specialty is they buy, they can fire large amounts of the latest NVIDIA GPUs simultaneously with all sorts of other software and services that go along with it, to the degree that you have the largest like hyperscalers in the world signing massive contracts to them. And so if you go back to what I was telling you about in those 30 to 60% cap rates, like if I'm buying in an apartment building for $10 million, that's going to have a $5 million rent roll. Does it really matter how much I borrow against that apartment building, whether I put down 50% or 0%? Like that debt is not, it's better to not have debt, but like if you think about your finance 101, and this is again a problem with all of these companies in Silicon Valley, is traditionally you have used equity and cash flow to fuel your growth, and now they're using debt, which brings you into a new risk paradigm. And so if for some reason, the wheels go off, like the collapse is like, obviously when we're just talking about 2008, the collapse is spectacular, but like, look, man, the world is changing, and like, it's every time like there's a benchmark as to like whether we're going to do this much or that much, like you blow by it. Like all the estimates are being blown away to the upside. It's happening faster. It's happening bigger. So yeah, like I own all these names. Like it's, my hair's falling out. It's getting grayer by the second, but like I'm confident in the long run that like at some point, like it'll get overdone, but that's years away in my opinion.
Jimmy, I got a bunch of questions in the chat. If you don't mind, I'll go through those.
That was an unbelievably good rant, Mike. I loved every second of it. So hopefully there's a lot of questions. First,
you've got a fan in here, which I'm glad to see. Alex P. Keaton, awesome. Mike Lee, super smart. I'm sure there's prepositions and stuff missing from there. The next one was Fed is a mess. All while the fawning financial media asks longingly, how do you want to be remembered, with a whisk of tears?
Nice job.
Yeah, that was really good stuff. And then he said same hoarding in oil and petrochemicals when we were talking about the hoarding in chips and some of the chemicals that go into chips. But I want to ask a specific question here from our buddy Remo. He wants to know your thoughts on Apple ahead of earnings, which is, by the way, tomorrow before the open or tomorrow after the close.
No, techs are always after the close because in the beginning, tech bros all slept in. We were the only ones who woke up early. The no tech names report before the open.
You got to imagine it's pretty good. And so I am a fan of this new CEO, and everyone wants to talk about what's Apple's AI strategy. There is no reason, like Apple doesn't need an AI strategy. Like Apple is like, you know what I mean? He's like Bill Murray in Cattle Shack. Everybody comes up with their AI and they just sit there, how about a little something, for the effort. Because they just take a toll, right? So how are you going to access AI? How are you going to access agents in your life? You're going to do it like the bulk of the population is going to do it through their iPhone, right? And Apple's going to get a piece of the juice. And that's like they built this ecosystem. And so it like what really makes them real. So they have their services, which is where all that money is going to go in. But how they can really juice it is with hardware upgrades. So like, I think my wife, like, she got the latest iPhone. Like we're a year off and it's way better than the one that I have. I don't know that I need to buy one right now because like the time and efforts to like make sure everything works when you log into the new one. I wasn't ready to make that commitment, but like if these upgrades are meaningful, these upgrade cycles are meaningful with the new hardware guy, because the CEO's like your old school engineer, like you spur on these upgrade cycles, they're like tidal waves. So
before you go on, Mike, I want you to go on, but Remo said, is Apple announcing a new CEO ahead of earnings signaling great numbers? Is that what you're saying, or you're just putting two thoughts out there?
No, like it's Apple. Like you kind of hope for like a negative reaction to Apple earnings so you can add to it, right? And it's kind of like the same thing with Meta right here. Like all these stocks eventually recover, and that's kind of like unless you're playing a trade for like a positive move out of earnings. If you're a longer term owner, you want like the market to take good earnings, chew them up, and spit the stock out because of like some little data point. Because those end up being like the entry points of entry points.
Bobby, I'm going to do the commercial right now for when Luis is going to put the thing up. But can we do a spot like technical analysis of Apple too? Because something interesting happened today. It rotated out of the rotation zone. It closed above it. To me, it looks like you might say it's signaling an up move on earnings. Before we do, Luis, can you put the banner up? You guys know that the favor I'm going to ask you. You guys have been watching this show a long time. We appreciate it very much. Please scan that QR code and try Tradier Pro for 3 months for free. We talked to people who've traded options for decades, some who've traded them for days. They all say the same thing about Tradier Pro. It is one of the best and most user-friendly options trading platforms that there is. It's the gold standard. Do it because you're interested in options, or do it just as a favor to us. We'd appreciate it very much. Thank you. And now back to the show.
Luis, can you put this up, please, as soon as I get it on there, because I'm just so good at doing this.
You're so good at doing this because all old men are really good at technology. By the way, Bobby, do you color your hair black?
No.
You don't? Okay.
No.
So here's what I like. I like that it rotated back out of the rotation zone. What do you think?
All right. So basically, you're right. There's a new short-term uptrend, which could turn into a forever uptrend, right? What I'm looking at is a development of this rotation zone, which is the yellowish and blue line, right? And it's developed this uptrend, and it dropped into the rotation zone on a gap lower and broke above it. And it's doing the same thing here today. The rotation zone is flattening out a little, but by the way, ignore these trend lines. I'll show you why these are here in a second. So yes, this is forecasting a little bit of an up move. Here is the small issue, and it's a very small issue based on what Mike said. It could be a buy down here because we've got a little bit of a daily double top. Now it has not triggered because we have not closed below the April 21st low, which is 265.40. We need to close below that to trigger that little reversal pattern. And all that does is bring you near the 200, which I'm sure Mike would love that. Let me show you the weekly and why I have these trend lines here. Because we're doing a triangle that is basically pushing an upward bias to it because the longer trend line is on the bottom side of the triangle and the shorter trend line's on the top side. We've broken it twice on a weekly basis, never really closed above it or never has so at this point. So there are a bunch of things pointing to earnings being an upshot move for Apple, but I haven't looked at what the options are projecting. Maybe Mike knows. Doesn't really matter. Anywhere this goes to support, I'm a loose buyer of it right now because the trend is a little bit higher.
And if they have good earnings and they look like they're going to close the week above that trend line, that's another
very
thing on the positive side,
yes.
Right? Okay, before we go on to the next question, I do want to remind you guys who are watching too, you still have 1 week to sign up for the Tradiers Trader Fest in Palm Beach Gardens. Bobby and I will be there with our friend Kenny Polcari, which means you shouldn't stand too close to the stage because oftentimes when we get together, hands go flying. So just stand back and everybody will be safe. Bobby, your question for Mike.
Yeah, so based on what I just said about Apple specifically, I like all the tech as well. What I worry about is the sort of overshot long-term trends these are in. So if somebody has the view that I have, do you think a dip will come to load up on it, on these things again? I mean, if I look at a weekly chart, so many of these things have pulled away from so much of the support, drastically pulled away, similar to gold at the end of last year and the beginning of this year.
Yeah, like that seems to be, and like you hear about like so I read a lot of the Goldman Prime notes, and you're looking at like this is going to be the largest month-end rebalancing from stocks into bonds, like maybe ever, just because bonds are off this month, and stocks have rallied so hard, off the lows during this Iran war. Yeah, you get an opportunity to get in here, but like I'm like long and loud in a lot of these already. So Microsoft. So this is just to go back to what I'm talking about. So Microsoft missed their CapEx numbers. Okay. So they only deployed just 31.9 versus the estimate was 35.29. And the stock's off because of that. Right. And so, but Meta is down because they're going to spend too much money. Right. So the streets, like it's, and like, so the bid and the ask
is fantastic.
Well, so the bid and the ask about like what, like the nuts and bolts of how AI actually works and where we're going, and what the street thinks about it. I've never seen anything so far in my life. And like, I have a lot of clients that I manage their wealth that work in this space. I have friends that run these companies. I have friends that are doing these massive data center lending deals. And like, I talk to public company CEOs that run data centers. So like, I don't know that I'm like the smartest guy in the world, but like somehow like small Asian Mike Lee knows a lot more than kind of a lot of the portfolio managers that are pushing these stocks around that just have no idea what they're thinking or what they're doing. And this AI really escapes them in terms of the nuts and the bolts and like how the basics of this works out. So like, I'm like buying any of these stocks on weakness. If you have free cash to deploy. A couple other things I like wanted to highlight for you. So first, CoreWeave is like the Rodney Dangerfield of like AI stocks. It just gets no respect. And it's because of the debt that they're taking on. But if you look at like how and why they're taking on that debt, and like I said, those numbers on these data centers, and understand that like the CEO is like a really kind of, he was a quant nat gas trader and ran a quant nat gas fund before he set up this company. So like, I'm sure you guys have worked with quants. They're not exactly the best salesmen, right?
They're awful.
So like, he'll speak for half an hour and I've got to take notes to try to piece together what he's saying. But like, if you put that effort into it, like here's a company, they announced massive deals between Anthropic and Microsoft this quarter. They added $16 billion to their backlog, maybe more. And they're already going to 5x their revenue between quarter 4 of 25 and quarter 4 of 27. The revenue is going to increase by a multiple of 5. So by the end of 27, they're going to be at a 20% plus net margin. So like, it's the growth here happening is just absolutely staggering. And then like another company, oh yeah, here's your buddy. He's asking about my all-time favorite stock, which is Palantir. And so Palantir has a software that does a lot of things. Mm-hmm. Okay. What it does for most of the world is it pieces all of your other software programs and processes together. It sits on top and it puts all the pieces together. And so remember, what feeds your crappy ChatGPT response is crappy data going in. So, and when it comes out the other side, like, what are you going to do with it? So what Palantir does is it ties all these things in and it'll feed it into Anthropic, into Grok, into ChatGPT. And then when it comes out the other side, it's either going to go directly into an agent or the agent's got to go into the business. Palantir is a glue that sticks all this together. But like what I've come to appreciate over the last, 3 or 4 months is their military capabilities. And so you had 7 different tech stacks in the military. You had the Army, the Air Force, the Navy, the Marines, Space Force, I think JSOC, and then 2 other ones that
Coast Guard. Yeah,
Coast Guard, and one other one I can't think of. Right. Every single one of them had their own defense tech, had their own operating systems. Well, Palantir's Maven came in and linked them all together. So to put this practically from a military standpoint, the 3 of us are in Afghanistan 15 years ago. There's bad guys on the other side of the mountain. Okay, we gotta figure out how to go get them. Somewhere we're the Army, the Air Force has a satellite, the Navy's got ships that can launch missiles, the Marines have jets that can fly over. There's other special operations guys over the other side of the mountain. Unless like our captain back at base knew about all that, there's no it's just us and like what we have back at base. Now these guys have a device that looks like an iPhone, and it links up all those things available to them. Okay, pulls all these systems together because now all those 7 tech stacks are on one operating system. That's Palantir's Maven. Feeds it all in. So it'll all feed it all in, go into Anthropic, give us 3 different mission plans we'd want to figure out, which will discuss tactics, resources. Okay. So we pick the one that we want. As we're fighting in the battle and they're dropping bombs and doing this, like the helicopters to come save us if we're in trouble or on standby. All our bullets are being backfilled. All the bombs are being backfilled. And if there's nowhere to backfill them, some guy in Iowa's getting an email to start building new ones. The integration of all the logistics and operations, okay, to go along with AI gives us a capability that no other like military force on earth could ever possibly comprehend, right? And that's not including their corporate world, but they'll eventually be this operating system for the entire federal government, because getting all these systems to talk to each other that are in different silos, okay, and taking data, both structured and unstructured, which was their original mission, and putting that together for national security, like that data applicability applies to everything else. So they're reporting next week, they're going to blow the doors off of their earnings, like their government sector. I was thinking maybe they could do 30 or 40 billion in total revenue by 2030, and you put a 20 multiple on that, 30 multiple on that, because they're a one-of-a-kind company. You get $1 trillion company. They're going to do over $30 billion in government revenue in 2030, and they may do just as much or more in corporate. And their biggest vertical is going to be healthcare, and they're just starting there. Like, there is one Palantir. It is the most unique software company that ever existed. You have clowns like Michael Berry out there trying to talk about it that just know nothing about it. And like, his main thesis against it is that this software is not that special. And like, I said it and Trump tweeted it out. If you don't believe that Palantir is that special, why don't you ask the Ayatollah? And if you can't ask him, go ask Nicolas Maduro. Like, there is nothing like it. There is nothing like it. This is a steal to get the stock right here.
Bobby, can we do a quick tech on Palantir? Now I want it.
It's all set, Luis, whenever you're ready.
Oh, you were ahead of me there. You are.
So the daily is a lot of Michael Blurry believers, because it's just kind of doing nothing. I mean, I can tighten this up and you can see when it fell off its new all-time high, which wasn't that long ago. It was basically here in October of last year, and it didn't really sell off. I mean, it dropped about $70, but this was a pretty spectacular move, and you would see this kind of basing around where you would expect it to base, which is basically right around the breakout area of 2025. Now, if you go to a weekly on this one, all right, this is where it gets really interesting, because earnings are May 4th, okay? This is a massive reversal pattern. It's a massive weekly double bottom, where if this particular thing triggers, you're looking at a move almost back to the new all-time highs.
So it triggers
by
what
happens?
What makes it trigger?
Well, a clue would be a close above this high, a weekly close above 162.40, which it's actually a little higher than that. Yeah, it's 162.40. A weekly close above that takes it back to the highest level since its weekly all-time high was in the first week of November 2025. When we see those kinds of moves, we see new all-time highs. I mean, maybe it sells off there, people take some profits, but it rarely takes a move like this and then reverses back up. This is very easy to have happen around earnings. It's a very easy move to have happen technically.
So if I can speak, Bobby speak, you say you don't touch it now, you wait till it settles above that level, and then you go for the ride?
I don't, because I do things differently than Mike. I mean,
right. That's I mean,
again, if I'm looking at this, Mike is loading up and Mike's going to make more money on me if this triggers, right? More money than me if this triggers. But my idea is to get the move from here to here. Mike's is to get the move from here and then from here and then from here and get that explosive growth over time.
Yeah, like I'm going to own this stock. I'm going to own this stock out years, right?
Yeah, yeah, and you do things differently than us. It's a different time horizon, and I think
and so for guys out there that are traders that have accounts for their kids, right, which is where my personal biggest positions in this stock is like my kids, right? And it sells off, I buy a little bit more. Sells off, buys a little bit more on my kids' accounts. And then like I don't own enough personally, but like, if I had more money, I'd own more.
But so, Bobby, I want to tell you something that's kind of funny is that, my biggest position for 7 years has been Google. You've heard me talk about why, right? Because it's the damn CIA. And as soon as I realized it was the CIA, I loaded up on it. But one of my favorite things is like now when it posts earnings, it's through the roof because my account is calculating my Google position, but it's not calculating the calls I sell against it yet. So it looks like I'm just absolutely crushing it today. And then I'll give back half of that when the options reval in the morning because there's no options market. But I love just looking at my account and having it say I'm up thousands and thousands and thousands of dollars, which is nice. Yes. But anyway, there's just another side.
Somebody in here, Mike, asking for me to look at the UNH chart, United Healthcare. So I'll look at the chart, and then if you have any opinion on it, I'll turn it over to you. Luis, I'm about to share it. We always like to get the people who are sharing and, communicating with us during the show to get preference over people who are not, obviously. UNH has just shifted on a daily basis to a more bullish regime. So you can see that, again, looking at this gold, this sort of mustard colored and blue line, this is the bearish regime. This is the nothing's really going on. And then we got the cross. I don't care about the cross, by the way, on a trading basis. Trading moving average crosses is just suicide. You don't ever want to do that. But what has now developed is a rotation zone above the 200, okay, and above the 50, by the way. The 50 trading above the 200 is the golden cross people talk about. Don't care about that either. That generally ends up being a false signal. But what that generally ends up meaning is that we get a pullback to where the cross happened, which is going to happen sometime in the next few days. And that'll also be a gap fill. That would be a massive buy for me. So if we got this golden cross up, and then we got a pullback gap fill to the area where the cross happened, that'd be about 327 or so, 327 and change. That's a big buy for me. If you look at the weekly on this, everything's already out of your way. My target would be the weekly 200, which this has been down below for a long time. So about 464 for a target if you get a pullback to the area I mentioned, which is again about 327. That's a pretty big move for a healthcare stock. Probably take a lot of time for that to happen.
Interesting. I love that analysis.
Mike, what do you think of the stock, if anything?
Can I bounce a thesis off you guys? And I want to hear what you guys.
Let's see if Mike has an opinion on.
Oh, Mike, yeah, go, yeah.
No
opinion.
It's just not one of my stocks.
Okay, go ahead, Jay.
Okay, so here's my thesis. I was just writing a paper on this for one of the brokerage accounts houses that I do research for, and I'm talking about, and we see some of these stocks, and it's kind of twofold. Is that there's been a correction in tech stocks that began in October. It's a sideways correction. So the notion that we're in a bubble, if we were in a serious bubble, I think somewhere along the line there would have been a capitulation. No, people are in a accumulator phase. Now this is here, so I'm going to try to make this quick. So in a normal geopolitical chaos, okay, people flock to the dollar, they flock to treasuries, they flock to gold. They used to flock to the yen before we realized the yen was a dog and it lost 50% of its value in 10 years' time, 15 years' time. But anyway, so the yen is off the safe haven list. So this is an interesting time. Is that okay? So you flock to treasuries? No, wars are expensive. Crude oil's high, meaning inflation expectations are rising. Can't buy bonds. So then you buy gold. No, you can't buy gold. All these central banks have been stockpiling gold for 3 years. Now they're actually using it and selling it because of the crisis, either to raise money to support their currencies or raise money to buy crude. So we've already taken two things off the list of safe havens. Guess what I think is replacing that on the list of safe havens? Big ass tech stocks, fortress balance sheets, cash flow. They are not sensitive to oil prices. They just don't care if crude's at 100. Microsoft's still making the same margin as is Nvidia, as is AMD. I think tech stocks are a safe haven asset in a time of global turmoil. Mike Lee, what say you? I put you to sleep. You're about to say, what'd you say? Were you talking to me?
So I'll just say, like, the same reason that, like, well, the reason why the safe havens didn't work here is because those greatest affected by the geopolitical shock needed to sell, like, they needed liquidity. Yeah. And so, like, all these Arab states own a ton of treasuries, they own a ton of gold, right? So in my mind, that's putting a lot more pressure on the treasury curve than say, how people feel about the U.S. fiscal situation. But, like, yeah, why wouldn't you buy Microsoft? Like, it's one of the best balance sheets in the world. Why wouldn't you? I think Apple has looked like a safe haven during this because, like, Apple, out of all the big tech, again, we just discussed their AI strategy. They're not building data centers, right? They're not buying billions of dollars of GPUs. Maybe they're going to invent their own, GPU or chip for the phone that'll process it, do AI processes in the phone quicker. But, like, it's not.
Bobby, do you like my thesis?
I do. I just keep thinking that, well, what you said, basically, this particular conflict, yeah, that matches perfectly. Because, again, I keep thinking of what Jim Bianco said. Now, imagine a war that we were actually involved in, where, let's say, a war with us against China to try and save Taiwan. I think it might be different then. But I think for this particular conflict, yeah, hell yeah, you're absolutely correct.
Yeah, okay.
Can I just bring it back to Palantir?
Hell yeah.
Yeah, why isn't it going up now, Mike?
So it's like this SaaSpocalypse, like the rumor mongering from the Burries of the world that really don't understand.
That's fair.
What's going on. But like China's not going to invade Taiwan, and it's because of Palantir. Like Xi Jinping can go in, and then we can just take Xi Jinping. The military capabilities of this country have always been spectacular, but there are limitations that have existed that are logistical, communications. Okay, all that stuff's gone, right? And so you gotta realize, okay. And so I think Iran's spokesperson has been watching CNN and a lot of America, because a lot of Trump people that are pro-Trump are very anti this war. We've inflicted over $200 billion worth of damage in Iran. Okay, over 13,000 targets. Since the second week of the war, they've had the latest and greatest Chinese and Russian defense tech and helping them doing targeting, like helping them. And they got 17 U.S. targets. We got 13,000, right? That sounds like, when I went to Australia to play rugby against those guys, like it's lopsided. And it's so much so that like when their spokesperson tweets, I post like the pictures of Monty Python, like merely a flesh wound. And so you're not like, unless they have Palantir, and you're not going to create something like it. Like, we're not going to war with China. Like, this is not, we are in a new, and I heard this, and it's hard to verify, but that since we took Maduro, China hasn't flown a military jet over Taiwan. Right. It's the advantages that we have on the war field now, the battlefield, are almost inhumane. And so it's like, I don't think it was a good idea politically to do this in Iran, but like it almost doesn't matter. Like, we're just, this high oil, like, it sucks, but like there's going to be a huge peace dividend on the other side of this. And like, it's, we say that it's like 10 to 12 days before they start closing in their oil wells, and the water's going to come in, and you look at permanent damage. They say 6 months. It's probably somewhere in the middle. But like, they don't need to go through that. Like, this is going to work out to our advantage. And it's kind of like the whole tariff situation that like, hey, like, we can endure a little bit of pain, but it's 1,000 times worse for everyone else. So
by the way, we should have had you on more. I love the fact that you don't pencil shit in. You write it with pen and you underline, and I really, really appreciate that. And that's good. We do our research, we get our thesis, and if you're wrong, you're wrong, whatever. You're not afraid of that. You're not afraid of that at all. This is your thesis, and you're doing it. And I love that. Bobby, you got any last words?
I don't. Mike's got a hard stop, so we might as well honor that so we can have him on again.
Yeah, no doubt about it. We don't want to piss him off. That is Mike Lee of Mike Lee Strategy. Please follow him on Twitter. You're about to say something. Say something, Mike.
Yeah, listen, you can't be 1 foot in, 1 foot out.
Amen.
You got to go both feet, because look, if you're wrong, you know what to do. You just go the other way, right? So
yeah.
Hey, can I just throw something in real quick, Jimmy?
Yeah, sure.
Yeah.
Alex P. Keaton, and I'd actually like to answer this because I just wrote an article on this, and you guys can add something in. Where do you see Dr. Copper short and long term? So long term, I see it up. Something that Jimmy and I talked about when the show started was that crude oil is up 56%. Copper's only down 1.69%. Copper is not reacting to the inflationary aspect of it, because if so, that would mean a little bit lower demand, but also higher prices. It's reacting, in my view, to a couple of other things. Number one, China, starting May 1st, is not going to export its sulfuric acid anymore. Sulfuric acid, of which China provides 30% of it to the world.
How are we going to get rid of bodies, Bobby?
I know. That's lying. That's lying. There's plenty of that.
Lime, I forget. Yeah, I got it all in my closet.
Don't worry. I got you covered. I got lime in the garage. We're fine.
Oh, that's good.
Essentially, it's a major component in leaching of copper in the refining process. So it's kind of a big deal. So there's going to be a shortage, and the price is going to rise a little bit, in conflict with the potential recessionary nature of a much longer stalemate here with the Strait of Hormuz. I agree with Mike. I don't think it's going to be that long. I think the blockade was a brilliant move militarily, because it was a nonviolent escalation. And it is doing wonders to Iran's economy. It's beating them up.
Yeah.
So I think over time, copper is going to do much better. Go ahead, Mike.
And look, the U.S. can start picking off oil assets one by one to start elevating the temperature. We don't have some of the cards; we have all the cards, and it's a matter. And like they're talking tough because they want deal terms. It's like Trump saying, like, I'm going to destroy everything. He's not going to destroy everything, but he's going to destroy some things if you don't give him what he wants, right? And they're not going to react violently militarily against us because they can't. But they don't want to. They don't want to lose. It's all they're negotiating in the media and they're talking tough. But like the end is near. My opinion.
You have galvanized my feelings in this too, because I had some similar feelings of this too. Like I believe I'm optimistic on this. The only thing
you've been consistent, Jimmy.
I think so. And the question is I'm 60 to 70% sure that the story that Iran was a growing threat that needed to be dealt with right away was a real story. 60 to 70%. I wish I was 100%. But again, that's just the trader in me trying to figure out exactly what the story is. 70% means if you're 70% think the guy in the bar is about to take a swing at you, you do take a swing at him first. I know I've done that calculation before. And when I was doing it poorly, I'd got my ass beat a bunch of times. So that's the story, right, Mike?
Yeah, look, I'd say I'm probably about a 6 to 7% sure that they were an imminent threat.
You said a what percent?
I said 6 or 7 instead of 60 or 70.
Okay, right.
Well,
but either way, it's going to be good for us.
But like, look, it doesn't matter now. That's not. Like,
it doesn't matter.
We're investing on a go-forward basis, right?
That is a fantastic point. It doesn't matter now. That's Monday morning quarterbacking. We got a game coming up on Friday. Yeah. Okay, good. I love this. This is a great conversation. It has definitely changed the way I look at things, particularly in the tech sector. Thank you so much, Mike Lee Strategies. Follow him on Twitter. He's a great follow. Thank you to all. You guys are the best. The questions we get, the comments we get are fantastic. Keep them up. We appreciate it. Please join us in Palm Beach Gardens next week at the PGA National Resort for Trader Fest. And follow us at unfilteredinvestor.com. This has been the Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. That's Mike Lee. We'll see you guys next week.
Thanks, guys. Cheers.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.